Yes, we can hear you.
All
Sorry, I
right,
had
all
a
right.
problem with my microphone. Please go ahead.
Sure. Okay, okay. Uh, so, so welcome everyone. We are going to start today's session. I welcome you all. We have again a very interesting topic for today's discussion. That is fintech in Africa. So we will talk about different aspects of fintech. We will try to learn that we will start with some basics of fintech. What exactly is fintech? Then why we are studying this fintech issue in particularly in African context. Then what is the state of adoption, up to how much people are adopting, the African nations are adopting fintech, and what are the future issues and challenges, and there are maybe some issues. So we will discuss about these important aspects in today's session. So this is the agenda of today's session. So now let's start with the basic concepts, which is fintech, that we are going to talk about. No, this fintech is basically getting attention all around the world. Everyone is talking about fintech. People are institutions, government, policymakers, they're all looking for these very issues. So this, what exactly is fintech? It basically refers to the integration of technology into financial services. Now, this is like this one, the fin that represent the financial services, and tech represent the technological adoption and integration. So, finance and technology, when you merge them, when you integrate them, and obviously, finance, we mean financial services companies like banks, financial institutions, and a lot of lending, insurance companies, payment transfer, and so on. So, this basically is the concept of fintech. Usually, this fintech particularly talks about payment system, how payment is done since financial aspects is there, and then via technological way, how these payments are done. The lending process, again, this lending process is particularly with the integration of technology. So financial institution using technological platforms, and they are coming up with different lending process methods and so on. We are in the domain of fintech. The insurance companies, they are using the technology and integration of technology. Financial service, again, one of the financial service company. Then blockchain, mobile money. We already, among all these areas, we are most of the people, they are involved in mobile money as well. The global context is basically this fintech is transforming financial inclusion. Everyone is participating in these financial transactions, in these the helping in these financial intermediaries. So basically, this is the one of the way that you are connecting different peoples all around the world, or around the different segments of the country, different parts of the country, different regions. So financial inclusion is basically one of the most important aspects that this fintech has transformed. More people are involved in these financial transactions. And particularly, this is happening more in emerging markets. And this we will talk about different infographics showing the fintech categories with icons. That fintech is basically each and every person and different peoples, organization, businesses, countries, they are basically focusing on fintech. Now, today we will particularly talk about this fintech, financial inclusion, technology, integration of technology within the African context. Now, the question is why? Why Africa? Why particularly we are talking about African context? So there are a lot of important aspects before going to the fintech in Africa. So we will just give an overview of why this issue, this financial integration, this technological integration is getting more important in this particular region. Now, African population. if we talk about from this prospect of population, now this is very interesting that it is over 1.4 billion. And mostly one of the most important thing that adoption of technology, since we are talking about the youngest and fastest growing in the world, these 1.4 billion, most of the people are youngest people. So obviously they are used to of the technology. They are have a good knowledge in terms of technology. Say they are using this technological advancement. They are aware about this technological advancement. So that's why the measure of the people they may be involved in this fintech. So that's why this population and the younger population and fastest growing population is basically one of the key aspects that make Africa that stress Africa that okay like fintech is getting more important in particularly in this region. One important thing, high unbanked population. Now, okay, so before going, we must keep in mind a few things that fintech is basically a different platform other than a purely banking sort of system, right? So not people they are using banking process via a formal banking process. I'm talking about you go, you open your account, you go, you deposit, you withdraw, and so on. So highly unbanked population is there. And we can see that over 50% people are unbanked. So that create an opportunity for fintech. Remember, fintech is basically the integration of right? We will talk about crowdfunding and other aspects, then we will know. So now there are 50% people, they are not using any banking services. So there is a lot of people, there is a lot of space that is creating that, okay, the 50% of the population may be shifted to a non-traditional banking system, which is basically fintech. Another important aspect in terms of digital growth, mobile subscribers penetration is projected to reach 49% by 2023. So 49% of the people are basically subscribing to mobile. Uh, so they are using mobiles, they are using mobile services, they are subscribing different packages and different mobile services. So 50% almost of the population is using this digital platform. So that is one of the way that financial inclusion or technological inclusion is more. So again, that creating in one of the future gap that 49% people may be encountered for financial inclusion. And then we will show different bars that is compared to African population growth versus global population. So data shows that 2.5% annual growth versus global growth of 0.8%. So as a whole, African population is growing rapidly than the global population. So that is again creating a lot of space for fintech industry. Now let's move to what is the current scenario, the adoption of fintech. So this adoption is basically fintech adoption in Africa has surged due to mobile money and digital payments. We have already talked about the Malaysian context, that how this fintech is changing the environment, how globally things are happening, how African population and technological advancement is cutting. So that's why this fintech adoption has one of the important aspect that mobile money and digital payments are surging. Most people are involved in that field. As of 2023, that is 678 active fintech startups, up to 301 in 2007. It was 301, and now there are 687 fintech startups. They are actually working in Africa. So that shows there is a cumulative growth rate of 18%. So there is an 18% growth since 2017 to 2023. So that shows that fintech startups are getting more, and so adoption rate is very high. That is 18% growth in terms of let's say the time period of 5 to 6 years. And one of the another adoption phenomena is mobile money. M-Pesa, that is one of the mobile money, one of the platform that is used for transferring of the money. So M-Pesa processed 26 billion transaction in 2023. So that shows mostly people are adopting fintech. They are using these M-Pesa. M-Pesa is one of the, you can say, one of the fintech model, right? So M-Pesa, they have processed 26 million transactions in 2023 with 56 million active users. So 56.7 million people are using M-Pesa. That shows that is, it was 32 million in 2023. So almost we can say it's not double, but almost like there is a huge increase from 32 million to 56 million users. So almost that is doubling the amount, right? So most people are involved in these transactions, and the M-Pesa active users are increasing, the transaction level has increased. And then the graph shows that fintech startups in 2017, it was 301, then 390 in 2019, 2021 it is 530, and now it is 678. So that shows a huge fintech startups increase, 678 in 2023. So overall, from 2007, 2017 to 2023, within 5 and 6 years, there is a huge growth in terms of adoption. So that shows that mostly people are adopting fintech in African region. Now, within the region, the adoption with, if we talk about adoption with reference to different countries, so leading countries, Nigeria is one of the leading country in terms of fintech adoption. They were 32% of startups have started in fintech, in different fintech platforms. South Africa with 20.6%. Then Kenya is number third with 15%. Egypt 9.6%. And if we talk about big four hubs for this fintech adoption in all the African region, so we can have South Africa, Nigeria, Egypt, and Kenya. These big four hubs, they account for 76% of the funding. So overall funding, overall the funding within this region, these countries share 76% of the funding. So a lot of fintech is happening within this particular region, and particular within these big four countries. Now, the pie, if we will talk about later with these pie charts. Nigeria 32, South Africa 20, Kenya 15, Egypt 9, then Ghana 5.2%, Uganda with 4.3%, and others 17.3%. So that shows the leading countries and big four countries. So that shows the adoption is basically happening around the Africa. In terms of payment and remittances, 54.3% of the funding, which is $1.58 billion in 2023, has been done via these fintech platforms like M-Pesa and whatever the other remittances and payment platforms are there. So mostly it is a huge amount that is basically transmitted rather than a very formal channelized banking system, an informal, and then via different platforms, that is basically the fintech or is me M-Pesa or whatever the different sort of technologies and platforms that they are basically used. Then lending and financing. Importantly, 37% of lending is so one aspect is payment and remittances, remittances you are paying and you are receiving, and then how much lending and financing are taking place, right? Other than just normal payments and receipts, the lending and financing is basically taking place, and that shows $1.37 billion or 37.8% of the lending and financing has taken place within this period of time. So mostly the people have shifted to traditional method to these new methods of lending. There is within this fintech, one phenomenon is very important, and that is buy now, pay later, which is BNPL, is basically the term used for this platform. So BNPL is one of the buy now and pay later, is one of the fintech platform, one of the platform that facilitate buying and selling, right? So buying now and pay later, one of the short-term financing sort of mechanism is available. And only in Nigeria, you can see that $325 million transaction has been done via buy now and pay later BNPL method. And that is projected to 1.2 billion by 2028. So it's mean more of the people and lot of transaction has been now shifted from and traditional buying and selling to BNPL platforms. And again, by category, payment is 43, then lending. So first, mostly in terms of adoption, mostly people, they prefer payment and remittances and lending, and then blockchain and other very few. But majority in Africa, payments and remittances and lending and financing is basically that almost like 43 and 37. So huge amount is basically done via these platforms. Now, there are different key drivers of growth that in sub-Saharan African countries. There are a lot of issues that why this is happening. Technological innovation, the use of algorithms and artificial intelligence, it allows for rapid and automated credit assessment, bypassing traditional lengthy procedure. Now, this is one of the most important things. Buy now and pay later, or any other financial arrangements. So there are AI tools, there are algorithms. You just put your information and all of the sudden you get all of your credentials. Rather than the traditional methods of borrowing and lending, where you process an application to the bank, they will assess your all the financial health, your credit rating, your credit scores, your credit record. Manually, they are doing this, or whatever the softwares are available. And then it will take some time via certain approvals and so on. Now, via technological innovation, these hurdles has been removed now. Now, there are algorithms, there are AI tools, artificial intelligence tools, machine learning tools, adaptive machine learning tools. There are a lot of tools, they are basically doing this work in a very short period of time. So lengthy procedures are now cut down. So this is one of the key driver that focuses that African countries, they are moving towards that financial innovation or that financial fintech. Again, we have already talked about a lot of mobile penetration is happening. Adoption of mobile phones, mobile money services has created a vast accessible market for digital lending, even in rural countries. So people they are using mobile phone, they have access to mobile phone, they have access to mobile money services like M-Pesa in Africa, one of the most important tools. In high demand, there is a significant population of unbanked, we have already talked about. So there is that leads and the micro and small and medium sized enterprises, they are basically coming up with this fintech platform. So they are making a huge involvement in this thing. If we compare the global context and African context, So global fintech lending market reached value of $125 billion in 2022, and it is projected to expand $1.8 trillion by 2023. So there is a huge multiple time advancement and growth in terms of globally. And if we compare this with the African, like Kenya and Nigeria and other countries, so we can see that Kenya and Nigeria is the leading markets, are leading nations in terms of fintech adoption. And we can see the key characteristics is dominance of foreign players. Over 90% of online alternative lending in Africa is provided by non-African companies. Now, this is again important that mostly 90% of online alternative lending, we mean fintech platforms, are other than traditional banking platforms. So 90% of the online alternative lending in Africa is provided by non-African companies, multinational companies. They are working in Africa and they are providing these facilities to African nations. And then one of the most important things, crowdfunding. Crowdfunding is basically, I will just explain you a basic phenomenon of crowdfunding is, this is basically informal uh, accumulation of wealth via your friends, your family, informal way. Now, a specific model gaining traction, this crowdfunding, which is one of the tool that is used and adopted via fintech. Fintech. And interestingly, the global crowdfunding market was valued at 13.84 billion in 2022, a huge market, showing its potential as an alternative financing source. So crowdfunding is now becoming one of the alternative source for the people, for the different regions, in terms of adoption, in terms of shifting from a traditional way to fintech. In sub-Saharan African countries, there are lending models. The first thing is payday lenders. Payday lenders, these are fintech offer short term. But remember, if they are short term, they are high costly. They are charging too much. And one thing, they are basically unsecured loans. And whenever we know that there are unsecured loans, their cost is high, the interest or other the financing cost, whatever the financing cost have been is being used, they are very high. To that bridge immediate financial gaps. So payday lenders, one of the fintech model that is active in Africa. Now these are very popular due to their accessibility and speed. Again, remember the fintech is basically technological way, technological integration. So that is speeding up the process. So that is more accessible and that is very speedy way to get and very short period of time is required. Like you can use your smartphone and mobile money account to get that funding. Obviously, we have already talked about a high cost and unsecured. If that is unsecured, since that doesn't require a lot of financial strength and so on, so primary concern is the potential of debt traps. Is we have seen that a lot of the interest fee, the hidden charges are there, unmanageable repayment plans, unambiguous sort of things are there, and leading a cycle of borrowing to pay off old loans. So that is one of the potential risks since they are using basically they are lending to each and every person. So obviously this is unsecured. So obviously you pay high cost both in terms of your cost and debt traps in terms of their hidden charges and their hidden payment procedures, hidden sort of payment repayment arrangements. So that makes more risky these paid day lenders. One of the model that is used in Africa. Next model that is used particularly and very important is telecom players and MNOs, mobile network operators like Safaricom with M-Pesa in Kenya that leverage their existing mobile infrastructure and extensive user data to offer credit. So M-Pesa, you people are very aware about this, that lots of the people, especially in Kenya, they are using this platform. So via your mobile network operators, they provide you this platform and you can easily transfer your money, you can pay, you can get back your money. So you use this platform. This is one of the, again, the second important model, the lending model that is used in African region. So they use alternative data points like mobile usage history. Basically for them, what is the criteria? How much mobile usage you are using, history, your airtime top ups, how much you top up, you put your amount in your accounts, the transaction records. So that create your credit scoring, and on the basis of this credit scoring, you are getting more different sort of M-Pesa sort of arrangements, and so that create a credit history on the basis of how much mobile usage you are having. And the advantage is basically they deduct loan repayments directly from a user's mobile wallet, right? You have your M-Pesa balance, so whatever the charges are there, they get from there. So that is one of the powerful mechanism for debt enforcement. So the second tool is basically telecom players and MNOs, and most importantly is Safaricom with M-Pesa. The third model, buy now and pay later, BNPL method. This is one of the lending way of short-term financing. So if you want to purchase something and you allow your customer to pay in installments, you go for buy now and pay later. So installment sort of thing. Obviously, this model is particularly popular among small and medium enterprises and self-employed individuals who need to manage their cash flows. You don't have enough cash to buy your consumer goods particularly. So that's why you go for buy now and pay later sort of arrangements. So fintechs often partner with retailers to provide these services, right? Though to assess your risk and facilitate seamless credit experience. So this is one of the most important third aspect lending tool that is used in African buy now and pay later. Now, what is the benefit? We have talked about mobile, we have talked about different mechanisms, right? So what are the benefits of fintech lending? We have talked about that a lot of people are going to this. The first thing is it promotes financial inclusion. Now, this is very important. Mostly, this financial inclusion, they are bringing different peoples in financial services. We have talked about that a lot of people are unbanked, are underbanked. Now, usually what is happening like for a traditional, people don't that financial literacy. They are not aware about, and they are reluctant to go to the traditional methods. They avoid banking, they avoid insurances. But via these platforms, they feel that this is the best way to connect with the different financial institution and lending agencies. The people start trusting these institutions. So a lot of unbanked and underbanked population is now bringing services. They are getting these services and they are basically including in that buying and lending process. So it is promoting financial inclusion. A lot of people which are unbanked, are underbanked, now they are using financial services. They are now connecting with these financial institutions. So it promotes financial inclusion, first thing. Secondly, since financial technology is there, it improved efficiency of the banks, the lending process, the borrowing process, the payment process, the reimbursement process. So the use of automated platforms, like we have talked about, algorithms are there. There are AI tools. They are fast. they reduces the time and cost associated with loan processes. With where in typical banking system, you put an application, the people assess that application, they check your credit history, your old record, all things are manually, then they process these application in different forms, and then the final approval, and it will take like 10 or 15 days. Via that algorithms, where we have talked about that M-Pesa on the basis of your credit history, the loans you have taken, your top ups, your credit history, your calling history, each and everything. So in a 1 second, they will process your information via this artificial intelligence tools. They reduce the time and cost, and the process is so it improves the efficiency of buying and lending and uh, uh, financing financial services. So this is one of the most important benefit that fintech is basically taking place. Next important benefit is alternative credit worthiness assessment. By analyzing non-traditional data, these models offer credit to individuals who could otherwise be excluded from the financial services system. Let's say, if we talk about conventional credit history, banking system, let's say if 100 people are willing to get credit, only like 10 out of them, after a formal banking process, they will get access to money. But in terms of this fintech lending sort of arrangements, majority of the people they can access. So rather than non-traditional data analysis methods and credit scoring method, that is basically involving more people towards credit assessment. So credit assessment is now easy, fast, and most people are now included in that assessment process, and they can get their money and lending, financing, or whatever in a very short period of time. Obviously, whenever we talk about these fintech lending, it support public sector programs. Let's say government is coming up with different short term, or we can say that general public for the advancement of the public. So they need different platforms, efficiency and securely distribute disburse aid, or there are different funds via M-Pesa. You all the people they have the M-Pesa. So government want to, let's say, for microfinancing, for starting small businesses, for starting personal short-term businesses. So government can effectively distribute this money via this channel. So it's so basically these fintech via, let's say, if you talk about M-Pesa, and government want to start distributed aid, financial aid to different people, all the, let's say, the people in Kenya. So within these very platform, within this M-Pesa, they can easily distribute all the money to the different segments. So if different citizens of that nation. So all the public sector programs or the government programs, these fintech learning platforms, they are basically supporting this, and they are increasing the efficiency of these different programs. This is overall lending flows by region. You can see sub-Saharan African American in terms of blue, Europe in yellow, and MENA countries in terms of green, and Asia Pacific, excluding China, in terms of gray. We can see in terms of growth, the green line, if we can see this green line, that is particularly sub-Saharan African country. So we can see in 2023, there was no lending platforms, fintech platforms. But in 2020, you can see now it has increased up to $1 million people. They are basically now involved in that lending region. So that shows that there is an adoption from 2013, 2020. So there is a rapid increase. Although This fintech is getting more in terms of Europe, mostly European countries. They have adopted this fintech. That is the highest fintech lending flow by region. So in all the region, this European region is basically leading, followed by Asian Pacific, and then American, and then African countries. So this fintech in global context, it is has a very increasing trend. Now, there are obviously, if we talk about a lot of benefits and importance and so on, there are a lot of key risks for fintech lending. The first of all, the most money laundering risk of fintechs, lot of like intense competition could encourage a race to the bottom where lending standards are relaxed, and potentially that is creating a bubble of bad debts. Bad debts mean like you are lending the money to everyone without assessing their credibility, their financial soundness. So what happens basically at the end of the day, these companies are facing a lot of bad debts. The people are not unable to pay debt, and an economic downturn is basically happening whenever a lot of bad debts are happening. So it's mean your credit is not utilizing in a proper way. So investor funding could lead to an instability. So these platforms and like people are investors and borrowers, lenders and borrowers. So they are basically facing a lot of issues. So this competition is basically decreasing the standard, and obviously it will increasing the bad debts within that platforms. Again, the next important risk in fintech lending is consumer protection risk. Consumer are not protected in that context because they operate with a lack of transparency. One thing, make sure that fintech, I'm not saying the all fintech, but majority of the fintech, due to their competition and all these things, the lack of transparency. So they're making it difficult for the borrower to understand the true cost of the loans. Maybe they are charging high fee. There are some hidden charges. So due to these high fees and hidden charges, and in consumers, they think they are not protected. Though they feel risky about involving into a credit, and later on they come to know, okay, there are high fee are involved, there are hidden charges, they are facing these hidden charges. So this is one of the potential risks of protection with reference to consumers or with reference to borrowers. Bias and discrimination always happen. AI-driven credit models, if not carefully designed, can cause and find existing biasness, leading to discriminatory outcomes. And then abusive debt collection practice have been reported already, with some apps using aggressive or traumatizing methods. Like since we have already talked about, there are hidden charges, buyers are reluctant to pay these things. They feel unable to repay their loans. So they use abusive debt collection practices like traumatizing the people, they're using aggressive tools and techniques, right? Threatening and all these things. So this is one of the biggest issue of lending as well. And obviously data privacy is very minimal, and that is a very huge risk from a borrower or a lender perspective. So data privacy is always on risk. From policy and regulation context, the regulatory landscape is highly fragmented. Like some countries have specific legislations for digital lending, while other still don't exist different rules and regulations. So that create a lot of a gap between the practice and via a legal protection. Since there are rules and regulation, they provide you legislation, they provide you protection. So people mostly they feel unprotected within this region. Let's say if we talk about how policies and regulatory is happening actually, Kenya is a leader in this area. We have already talked about that Kenya, in terms of fintech, is leader. The Central Bank of Kenya has implemented regulations aimed at improving consumer protection and frauds, right? So they clearly disclose all terms and conditions for the loan, including interest and fees. So there is no ambiguity remains. They have a very established, a very effective complaint and dispute resolution mechanism that we have already talked about, and limit data collection to provide the services. So data protection is there. Abusive method is now minimum, and transparency, they are making that transparency. So that's why the Central Bank of Kenya is basically implementing these regulatory trends, policies. So they are protecting the users. So all the countries must follow these regulations, and each and every digital banking and digital lending mechanism must be well explained in terms of legislations. P2P lending in sub-Saharan, you can see jurisdiction, yes, no, and they are basically not cleared in terms of percentage. So highest is basically, people think that P2P lending in jurisdiction with a mandate of, so these are the different regulations of jurisdictions. Central bank is one of the leading, then multiple regulatory authorities and capital markets and other financial uh, things. So in terms of that, central banking is basically highest mandate our P2P lending in terms of regulation, followed by different other multiple regulatory authorities, and then the financial markets are security and capital markets. So the role of policy makers is one of the key thing in terms of this thing. The goal is to strike a delicate balance between fostering innovation and mitigating risk. Now, whatever we have talked about, we are coming up with this thing that, okay, like this is for innovation is bringing, they are bridging the gap, but at the same time it is creating a lot of risk. We have talked about a lot of risk. There are benefits, okay, we understand these benefits, but ultimately all the lenders and particularly the borrowers, they are facing different risks. So it is the role of policymakers to come up with a balance between innovations, like that is fintech innovations, different uh, platforms and tools, and then there must be rules and regulation to mitigate the risk, to minimize these risks. So it is the role of policymakers. They must create an environment where fintech can thrive while protecting consumer, ensuring financial stability. Financial stability is only possible when consumer feel protected. So what is the role of policymaker? They need to protect these consumers, their borrowers particularly, if they feel protected in terms of risk, in terms of data, in terms of policy making. So they will obviously shift towards these fintech platforms. Financial influence will be high, and ultimately financial stability will be highest level. So the key thing that we need to understand is we need to make it is the role of policymaker, government, institution, financial institution, particularly the central banks. They have to create such a policy. They have to create a balance between innovation. So protection and consumer protection is one of the key for the advancement of fintech and for financial stability. Now, what they can do for that thing? They consumer protection should be there. Robust regulation that mandate transparency and protect borrowers from predatory practices. This is the key thing that policymakers must do. This is, we can say that these are the ways or action through which you can mitigate the risk and you can bring the financial stability, or you can increase the financial inclusion, or you can increase the financial integration, or you can use to make people to adopt that fintech. So consumer protection, this is the one of the key thing that we policymakers need to robustly talk about, and they come up with regulations, transparency and protection, two things in that phenomena with reference to borrowers or consumers. Then one of the most important thing, financial literacy or financial education. Policymakers, government, and financial institutions, and particularly central banks and even fintech companies, they must launch initiative to increase financial literacy, educate people, give them financial information, give them financial uh, education, just to make empower that they can make informed borrowing decisions. If you are having financial literacy, if you have enough knowledge about these financial arrangements, of about these fintech tools, techniques, methods, channels, procedures, though they can make informed decisions, and the risk involved in borrowing and lending will be minimum. So financial education, educating people, educating general people, making them financially increasing their financial literacy. So this is one of the tools that policymakers must consider. And data governance. These are again one of the important issues. Regulatory framework must be there. Clear rules and regulation for data protection. Since mobile users, your data is your data is shared with your whatever the fintech tool that you are using, platform that you are using. So data protection policy must be there. Regulation framework, a very comprehensive regulatory framework must be there to adopt new fintech models and prevent regulatory frauds and arbitrage. So this is the final outlook to 2023, that what is going to happen in 2023. The payments. See, four important aspects with reference to what is going to happen in 2023. That is the future prediction. Payments. Payment will continue to digitalize. Remember this thing. And particularly both for retail and public payments. Rise of instant payments, rails, and QRs. QR codes are basically now will be used for payments. So digitalization is getting place in terms of payments. More people are involved. Like we have seen that 43% of the people in Africa, particularly, they are using mobile money for. They are using these fintech platforms for payment systems. Then SME finance, small and medium enterprises. Their financing is basically based on data-driven underwriting via point of sales, e-commerce, payrolls, growth, and business-to-business fintech. So small and medium enterprises, their financing is basically underwriting via point of sales. They are getting more funds from these crowdfunding that we have talked about. E-commerce, their buying and selling is taking place via these channels. Buy now and pay later. Payrolls growth, and then B2B fintech. So all these SMEs are basically involved in that fintech adoption, or they are moving towards fintech adoption. And then one of the most important thing in upcoming time is insurance and saving. Micro insurance, new concepts in fintech is getting a role. So outlook to 2023, that shows that most of the firms, they are basically now moving towards micro insurance, short-term insurance plans. Basically resilience. So insurance and saving has been shifted, or it is going to be shifted towards fintech platforms. And then cross-border. corridor specific remittances, cross border remittances, and trade payments streamlined via partnerships. Again, the future outlook is the general payments, SMEs, insurance and saving, and cross border, each and everything. It's not limited to a certain region, it's not limited to a certain area in certain country. The globally cross border transactions are now happening. Their remittances and trade payments cross border are basically possible via these fintech platforms there, because they are operating generally on a large scale. And the policy of that mandates risk-based, know your customer policy, data protection, and shape winners. So this is the key things that uh, we need to understand about fintech. So what is the key takeaway for today's session is basically fintech Africa. African got that potential of increasing or shifting towards fintech. Adoption rate is high. There are certain benefits of fintech. There are certain challenges. There are certain risks, and how we can tackle this risk via policy making, via effective policy making. So this is how fintech is happening in globally and particularly in African region. Thank you very much. So house is open for question answer session.